Don't wait for tomorrow. Live for today. Keep chasing the sunshine and go out and play.
And good day, everyone. Welcome to another JK Deal Reveal. I hope you're having an amazing week, month, and year. I am super excited today. Once again, I've got a couple more announcements for you. First and foremost, congratulations to those who took advantage of the last call's giveaway. And by the way, if you didn't catch it, go back and find it. There was a giveaway. You may have missed it, or go check on YouTube and see what I'm talking about. So either on the Facebook group or on YouTube, you can catch last week's deal reveal and see what I'm talking about. So the Facebook group, US Real Estate Investing Club, now for tomorrow. And super excited for a couple things. First of all, we have a pretty big deal today, and we're going to see if it's a deal or not a deal, but it's a pretty big one. It's $2 million, and we don't usually see those type of big numbers in the Cleveland market, but we'll see what we can buy for $2 million. And also, I want to prep you all for next week, because there is a high chance that we are going to bring to you an opportunity that you can buy live. We're going to bring the owner to the call for a Florida vacation rental already themed property for sale. All right, so you'll want to join next week for that. So we're getting excited. Why are we getting excited here? Because we're going to take a look at a deal lightning fast, and we're going to size it up to see if this is something we want to take a bite out of or not. So this deal was submitted by Alex, so thank you, Alex. And the context here is we have actually it's two total 92-door motels. So there's two motels being sold off market for about $2 million, total 92 rooms. Caveat, it's in East Cleveland. So let's go take a look on this. Is this a deal or no deal? This is up to you to decide. So in the chat or in the Q&A or in the reactions, you go ahead and ultimately say if this is a deal or no deal for you. So start the timer. Here we go. So we have a property, and for if those of you who are a little bit familiar in the Cleveland and East Cleveland area, these two motels are very close to the Euclid Motel. All right, and I went on Google and I went to go get the Euclid Motel's address right there. Just because we didn't want to disclose the specific address, I didn't, but ultimately here it is. All right, so this is the area, and if you've been on the deal reveal before, you know that East Cleveland is a be very careful area. Okay, so keep that in mind as we're proceeding here. The second thing, all right, we are buying now two motels, right? 40, 50 door each. This is definitely commercial lending, is involved here. It's not residential lending. It's not based on comps. It's really based on income. The more income that these assets are generating, the more value they have to the eyes of lenders and banks and so forth, the more valuable your asset is. And so we want to get a sense of maybe what could this property generate. So I went into AirDNA, right? And I put in an address that was very nearby, because AirDNA is not built for like hotels, motels. It's picking up the Airbnb and VRBO data. So I just found an address that was very close to this address, and I just said this is a studio, 1 bath, 2 guests. It's a motel room. All right, what type of revenues can we expect? And look at this, $26,000. All right, let me pull up a calculator here for you as well. If I'm bringing in $26,000 a year, that means I'm bringing in $2,166 a month, which would mean about $72 a day if it was booked 30 days out of the month, which is, obviously not the case. So we'd be probably renting for $70 to $100 a night. And since we know East Cleveland, I think we're going to be closer to the lower end. But this is fairly encouraging data if you look at it up front, because imagine you bring $26,000 a year per door, and you've got 92 doors. All right, so that'd be $2.4 million of revenue that is kicking off this building. Not bad for a $2 million purchase, right? But be very, very careful, because there's a couple of really key things here that we have to keep in mind when we're looking at motels or short-term rentals. One, all right, if we're in the low values, and I would say, 2,000 and under in annual revenue per unit is a low number, because you have to clean that unit every single time it turns over. And the cleaning of a room is anywhere between probably $30 and $70, depending on if you have full-time employees doing it, or you just have your professional short-term rental cleaning company that's servicing other Airbnbs. For a one room and a bathroom, it could even be $100. So we really have to dial that in. And to give a little bit of insider's knowledge on this, on average, you will see about 7 bookings a month. All right, so 7 bookings a month, and if it's costing you, let's say, $75 per clean on this motel room, that's $500 a month, and so that's $6,000 a year. So you can see here, we haven't paid taxes, insurance, management, maintenance, mortgage, utilities, and there's $6,000 being chopped off the top. It's non-negligible. It is 20% of the gross income. And this number I like, it's pretty high, but still the cleaning fees on these lower per unit income, they do chew up. So don't forget to count those in. A few other things, all right? It's real nice to see 26,000, but what are you basing that number on? Now, AirDNA is basing it on $114 a night and is basing it on a 63% occupancy rate. So 63 is fairly average for a market occupancy rate. 114 is low. Anything above 125, under 125, I consider low. But honestly, it's not that bad, right? These numbers are not that bad up front. But keep that in mind as well. Because if someone told you, oh yeah, we can rent this $114 a night, $114 a night, and you just do your math of 30 days a month and 12 months a year, you're going to see that 41,000 is almost double the 26. Okay, so in short-term rental, the occupancy rate better be safe than sorry. Better run your numbers closer to a 60% and be very far from a 100%. Now, if you manage to get it up to a 75, 80, 85, our Magical Muggles Mansion in Florida right now is running over 90% occupancy rate right now, but we're doing a ton of optimization. This is not common, all right? And there are ways to do that, but when you're running your numbers up front, better be safe than sorry. That's I guess I'm at number 5 now. Next really, really important point here is location, all right, location. So let's just take a quick look. I just happen to have some information on these properties, and let's open one up and see. Okay, off market. This is what it looks like. This is one of them. This is 42 units. And excuse me. It is off market. This off market 50-unit motel for sale is a value add opportunity delivered vacant. Okay, delivered vacant. What does that mean? That means it don't make no income. What does that mean? It means it was probably been vacant for a little while. What does that mean? It means you're probably going to have to put 10, 15,000 per room to bring it back up. Oh, okay. Let's take a look at that. 92 times, let's say 10,000 if we're a little bit on the lucky side that it's not a complete dump. Well, you need an extra $1 million of capital to make this happen. Now, you will have lenders who are very happy to lend you $1 million in renovation, but are you very happy in managing $1 million renovation over 50 units? All right. It is a project. All right. So if you're getting involved in this, I'd say make sure you take a few months to oversee the project personally. And I'm being very, very conservative when I say a few months to turn 92 units. Okay. But delivered vacant means there is no income currently, meaning what is the value of this commercial asset? A commercial asset's value is based on the net income it generates. What is the net income of something that brings in no income? It's not zero, it's negative, because you still have to pay taxes, you still have to pay insurance, you still have to pay the base utilities, right? So this is losing money right now. And so for a bank, you're going to have to go to some very special banks that are okay with the risk of lending on something that has no value. So you can be sure that you're not going to pay 8% on that loan. It's going to be much higher than that. And so, whew, what do we think about this? Deal or no deal, right? Potentially in some utopian world, it's kicking off $2 million a year, right? In gross income. And so we can easily slash that in half. So you have $1 million of net income in this utopian world. To buy it for 2 and maybe put another 1 million if there's no major issues with, say, the parking lot, even, because just a parking lot could run you 100,000, right? Easy. So just these round numbers: 2 to buy, 1 to bring it back up. We're in it for 3. It kicks off 1 million net a year. That sounds pretty good. That sounds like a 33% cap rate to me, right? $1 million net income divided by a $3 million total project, 33 cap, right? Not really cap. It's more of a cash on cash, because we basically have a year of renovation to put in, $1 million renovation, and we are in East Cleveland, right? Just having a duplex or a single family in East Cleveland is like, is it sexy enough? Am I buying something that's, really, really juicy enough to weather that risk? Having a motel in East Cleveland, 92 units, whoo, you're in for a ride. I don't want to lead the question a bit too much. Is this a deal or no deal? And let's hear your comments in the chat. Let me know what's happening here. And while you're writing that up, I want to give another tip. If you are looking into buying a business, because a hotel or a motel, you're buying a business more than just a piece of real estate, because you have employees to manage. You have the cleaning staff. These are 24/7 shifts sometimes, often in the motel space. When you're looking at their P&Ls, when you're looking at their profit and loss statements, do not overlook wages and salary. Often, I'd say, especially on these smaller mid-size motels, often they're run by mom and pops. And so it's owner owned, owner managed, owner operated. And they will not write their own wages in the P&L. And that's a very wise move for them, because that might be a $50,000 times 2 salary that poof, they can magically make disappear from the numbers, and 100 extra thousand of net income on a property makes it worth probably $1 million more than it actually is. Okay, so they can sell it potentially for $1 million more if the buyer is just looking at all the numbers and, oh, everything's lining up, yeah, it's making this much net income. Don't forget to very, very carefully look at the employees, their wages, and is there a manager involved in those numbers, right? The owner, what's the owner's involvement in the property? Obviously, not the case for this. It's delivered vacant, so there will be no profit and loss statements. So you are buying a liability, a big one, right out the gate for this hopefully potential future utopian 33 cap rate in the future. So I went on and on. I gave a lot of value. We don't do motels very often or commercial assets, so I wanted to give as much value as I could in the 10 minutes that we have here. But based on what we said, is this a deal or no deal? Deal or no deal? Let's see what you have to say. Amanda, if I was a very experienced and seasoned investor in the US with large commercial properties, then maybe a deal. But as a relatively new investor, no deal. Too much to take on. Plus, East Cleveland, not ideal. I'm going to go one step further, Amanda. East Cleveland is more than not ideal. Okay. East Cleveland is probably one of the biggest red flags you can have in Cleveland, right? So it better be something in freaking credible with safeguards in place if you're going to be buying in East Cleveland. Excellent. Anybody else who'd like to comment? Deal or no deal? I know I led the question along the way and I'm being pretty harsh here, but the reason I'm saying this is because are you buying an asset or are you buying the dream of an asset? Are you buying on pro forma, on what could be in the future if everything goes well and stays on budget and on time? What are you buying as an investor buying in the US? Are you buying an asset or are you buying a dream? Super important for you to stay critical as you're making your investing decisions. Arlette, low rent motels suffer lots of damage from renters. Disappear in the middle of the night without paying, demographic too risky. Agreed. There are ways to hedge risk from damage with insurance. There are specialty insurance companies that for a low cost can really significantly hedge that risk, but you're absolutely right for demographics and in general of your statement. Absolutely. Yeah. If you have to discount it down to $40 a night to fill up those rooms, there's not much spread because hotels typically it's not like Airbnb where you have the nightly rate plus cleaning, right? It's the price, right? And that's it. But you have to factor in the cleaning. So imagine, right? If the cleaning is, if you're say you're pretty lucky and you say it's $40 for the cleaning of that room. Well, if you're charging $75 a night, which I think is pretty much what this is, you know, what you'd expect. If you did some nice renovations, maybe you'd get up to 115. I think so. For even in this area. But still, if you're just charging 75 and you're charging 40 on cleaning, you haven't paid any of the other expenses and you only have $35 left. And you still have to pay like sales tax on the hotel income, right? So Arlette continues to say, I would never buy a motel. Well, that's your choice. Motels are not bad, right? But there are bad ways to do it for sure. And there is more to know in the hospitality, commercial lending, transiency, weekly hotel, there's a lot that can be done. It's very different than just buying a single family or a duplex or even an apartment building. Yeah, you got it. See, Arlette, I would never buy a motel. Caveat, funky millennial motels are doing really well, right? So you got it, exactly. I always keep my eyes and ears open to opportunity because if I were to buy a motel, right, and we put offers on motels and hotels before, we just never pulled the trigger, we would absolutely theme every single one of the rooms. And you can imagine how what was maybe a 24,000 per room could become a 36 or maybe a 40, 48, maybe not in Cleveland, but who knows if it's well located, you can make some serious differentials on the numbers and your cleaning is the exact same, right? So expenses stay the same, but income doubles. That makes a lot more cash flow. And that's the whole idea of investing in US real estate for cash flow rather than in a lot of Canadian markets where it's simply not possible. So that's our deal reveal for today, ladies and gentlemen. I hope you enjoyed. Next week, I'm going to try to bring on that vacation rental in Davenport, already themed and for sale right now. And so if you're interested in that, that'll be next week. And I want to let you know that the Epic Blueprint, it's gaining a ton of steam. We are working around the clock already, and it's in October. That's how much work we put into this for you. The next Epic Blueprint, you can let us know you're interested, and we will put you on the early bird list, okay? Because the early bird list is going to end in a couple of weeks. If you're interested, just send an email to info@nowfortomorrow.club and we'll just keep your name on the side and you will get basically a $500 discount on the price just because you sent that email in advance, okay? So that's the early bird special that we have for you. Don't miss the bus. We're really excited to have you. And I'm going to wish you a most wonderful evening and rest of week and weekend. For those who are joining in the mastery call at the hour, what are we going to be talking about today? We are going to be talking about, sales. We're going to be talking about the sales process in any business, how to simplify and streamline a sales process so that you're not wasting time indefinitely with unqualified potential customers or buyers, tenants, investors, whatever it might be. The sales process is the same. So we're going to dive into that and answer any questions you might have. So with that being said, have a great one. We will see you soon, and congratulations, honestly, for continuing to do now for tomorrow. Have a great one.